Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 9th of the 9th, 2024. Peter Maguire, CEO of XM Australia. Welcome back to the table, Peter. When I hear Omar talking about the market could be dead, or to that of some sort of analogy, I couldn't help but think of the famous Monty Python sketch of the parrot is not dead. You know, this parrot is perfectly alive, so please buy it. Speaking of and starting with all things China, Peter, what's your read on China as we now move out of the summer into getting into towards the Chinese winter? Can there be life in that old parrot yet?
Well, it's just sick, I think, Sean. I don't think it's dead, as they say. I think that was the comeback from Michael Palin, wasn't it? There's nothing wrong with that parrot. It's just sick. And good to see everyone, and greetings from Sydney. CSI 300 down in that 3,100 range, Sean. It's off around about, I think, 1.2, 1.3% today. So there's structural weakness in the Chinese economy. That's been demonstrated as far as stock market, and it just seems to be grinding lower. And the way it's going at the moment, is there any chance you could actually see in the high 2,900s? So there just seems to be softness. There's the first part. We understand, I think, from an export-driven model, the consumption is a lot weaker than what China would naturally want. They're trying to get internal demand, but that's not an easy picture when you've got that huge overhang with property, as we all know, and who's holding that debt. So I think that China's got a pretty tough till the end of the year. It's going to be a hard road, and we've just got to see where it goes as far as other countries with their interest rate policies and how that impacts naturally hard-based commodities. Iron ore's at $90, the likes of copper and the base metals, and I suppose China's fortunate with the energy prices at these sort of levels, Sean.
Peter, I wanted to get your thoughts on the Fed decision and the size of the cut. You put out on your end of weekend your weekend notes from Coogee Beach. I love the name of beaches in Australia. Is this something? It's like I don't know, just creates the imagination. Coogee Beach. There you go. But anyway, CPI, the last data point before the Fed moves, you are asking, will the US CPI back the case for 50 basis points cut? Your answer to your own question, please, and what difference would it make for the oil markets?
Well, a couple of things, Sean. I think first off, the jury's still out. Is it going to be 50? And I think the momentum at the moment is certainly erring to that sort of target. Where, yes, we've got that number being dropped, I think, on Wednesday, as you mentioned. You've also got structural weakness in the labour market, and you've got to look at the likes of Governor Chris Waller and, of course, Fed President New York, John Williams. They're really concerned about where that labour market is trending, and that really, I think, is more focused than necessarily the CPI read, because they're saying to themselves, we've revised this down for July back to I think it was around about 87,000, 89,000. I've got in my notes here. And it was softer than expected, that NFP last Friday. The momentum is there. It's saying, right, a company's starting to downsize. You're seeing an increase as far as layoffs, which is very evident. So this is the sort of concern that they're worried about. And that's why I think that, as building on what Omar said, I think that everything, the jury's out at the moment. We're waiting to see what happens, and the market's either going to say, wow, it's worse than what we expected as far as jobs and the economic situation in the States. And I really think that they'd have a lot of concern trying to do something again, possibly even in November or December, considering you've got that election. Another thing you've got to be conscious of is the possible government shutdown on the 30th of September, how that's going to work as well. So there's a lot of, I think, moving targets here, shifting sands over the next 21 days, and how that is interpreted from the market.
Would it have an impact? I mean, obviously, Asia, the critical demand center of incremental oil demand growth in the world, has been for decades, most notably China. Does it matter to Asian consumers, Asian demand for energy, if the Fed cuts by 25 to 50 basis points? I mean, a lot of those countries carry US debt. What's the impact there and the difference likely to be felt in Asia?
Well, I think, Sean, is there going to be an unwinding as far as equity markets? You've got the Nikkei back at 36,000 odd. We've seen the volatility over the last month and a half. You're going to see structural weakness engage across equity markets. That's the concern. And then where does that roll as far as just market sentiment, market interpretation? And they're the core instincts of any trader. They want to know whether it's a time to be short or a time to be long. And maybe it's and it can be violent. You've been in the markets long enough. It can be violent, and that all of a sudden you see a quick 5 to 10% wiped out across S&P or Nasdaq. You saw a 10% wipe out the other night on Nvidia. So let's just be very mindful that these things can move very, very quickly, and that's the exciting part of the market.
Peter, meanwhile, the opposite side of that sort of inflation is the deflation concerns. We mentioned there Japan. China's core inflation cooled to the weakest in more than 3 years, as published today. Again, bringing back concerns about deflation, Chinese consumers not spending. How big of a concern do you think that is? We had it sort of pop up about a year ago, deflation in China. It seems to be still there and maybe becoming more pronounced. Your thoughts on deflation like we saw in Japan? Is China following the same model as Japan over the course of the second half of the 20th century? Japan, of course, as we know, became the bionic economy with more than half of the top most valued companies in the world in the 1980s, and then fell off a cliff. Is China going to go that same route? How big of a concern and issue is that?
It's a big concern, Sean. I mean, that overhang, we start with the property sector. Michelle touched on it briefly, and you can't argue about it. The size of it and the depth of it and the global impact from a contagion standpoint, who is holding that debt? Secondly, you've got the CSI, as I said, it's now through 3,200. It's been punched down again today, down 1.25%. There just seems to be, again, structural weakness. Yes, deflation. You've got to remember that China sells a lot of stuff. It imports a lot of metals, and they import a lot of coal from us and a lot of iron ore, and we give them energy in the sense of, for power plants and everything that goes into that, and those finished goods get exported or they steel. But you need consumption to buy those finished goods, and this is the great concern that China's facing. There's structural weakness globally as far as people are tapped out with credit card debt in the West, and the internal issues in China are very, very concerning for their government with high youth unemployment.
But why isn't the government doing any kind of bazooka sort of problem solving here, or are we misreading their decision making?
Well, I think you need people to be able to work, Sean, and this is a great concern because you've got high unemployment. So yes, they can do certain strategies and certain stimulus measures, but the reality of the matter is you've still got to fund it, and you've still got structural weakness in the economy. And this is where many people and many analysts are saying, how does China move itself out of that? And from a deflationary standpoint, it seems to be grinding lower. So I'm curious to see where it runs by the end of this year, because if you're looking at a chart, we're well down from those 3,700 highs of the CSI, which was only in April. It's been a very bleak summer for them so far, and it just seems to be a race to the bottom.